Hello everyone, welcome back to another episode of the Hamid Trades YouTube channel. My name is Hamid Trades, the best YouTube channel about the stock market, the only one worth watching. So in today's video, we're going to be taking a look at the overall stock market. We're going to talk about the SPY, the NASDAQ, the IWM, the dollar, the 30-year bonds. We're going to take a look at the large tech stocks and put it all together. All right, so without further ado, let's get started with the video. So number one, what we need to realize is that at 9 a.m. tomorrow, Fed Powell is going to be giving a speech. Obviously, we don't know how that's going to affect the market, but we should expect some turbulence, right? Thursday, we have CPI data coming out. But immediately, what I want to first start off with is taking a look at the dollar. So what we do know about the dollar is that the dollar and the stock market usually have an inverse relationship. So if the dollar is falling and showing weakness, that is usually a good signal for the overall stock market, and the stock market tends to do well. Okay. So what we're seeing here is the dollar is starting to get very overextended to the downside. And in the past, when the dollar, in terms of the Bollinger Band, right? So in the past, when the dollar has also shown a lot of weakness and was showing a lot of weakness outside of the lower level of the Bollinger Bands, the SPY was very, very strong during these days. So we can quickly take a look. November 10th, 11th, 12th, basically middle of November, right? And if you just go to the SPY, what was the SPY during this time? November 10th, 11th, 12th, it was hitting highs, and it was trading very with a lot of strength. All right. So now generally, when we do get this weakness outside of the lower bands here, it can continue falling a bit lower, right? And that, this weakness in the dollar will continue, like the strength in the stock market should continue. One of the things is that the MACD has not yet crossed down below. So if you take a look at the MACD indicator, the blue line has not yet crossed below this orange line. And usually when that happens, that's also bearish, right? So we made new lows on the dollar, yet the MACD has not crossed down below. So there's still more room to go to the downside on the dollar. And this weakness in the dollar can potentially show more strength into the overall stock market. So let's see how this plays out. But so far, this is my thoughts on the dollar. Let's go ahead and take a look at the bonds. So the 30-year bonds. 30-year bonds have more of a correlation to the overall market. So if the bonds are doing well, then the stock market should also be doing well. Okay. So what we see here, what I wanted to see was we wanted to see closes above major levels of resistance on the bonds. And so far it looks like we're about to close above 129.20, which is a major level of resistance. This is actually, this is not entirely perfect, but we can keep that there. It coincides with the close of this candle. So basically, if we can close above 130, that would be ideal. But we are clearly seeing continued strength in the 30-year bonds. So now if we get a close above today's high, that is definitely going to be very, very good. And if that happens before CPI data, we can continue rallying into Thursday before CPI data gets released. But of course, tomorrow morning, it's dependent on his speech. All of this price movement and everything is now dependent on Powell's speech, but it's good to see how everything moves in correlation. So in the future, when there is no Powell or when there is no macroeconomic event that may happen, we can use this knowledge and, apply it to our overall stock trading strategies. So now what I want to do is I want to take a look at what was moving the market in general. All right. So today, what we clearly saw in the morning was Tesla was up substantially. All right. So Tesla did really, really well. It obviously, it was up close to 8.5% intraday. Right. And the chip stocks were up huge as well. So Nvidia, AMD, and Tesla helped propel the market up. And it helped, push the market do really, really well. So now, when taking a look at the SPY, right? So now that we know what was moving the market, the SPY showed a lot of strength. We jumped all the way up to almost 394, but we reversed back and we ended up red for the day. So that is actually like very, very bad for bulls, right? So when you take a fib level from the recent highs of December 13th and to the recent lows of December 22nd, you can see that we failed to close above the 38.2% fib for 2 days in a row. So, I mean, technically we did show some strength heading into it. Heading into today, I said that, you know, yesterday there was still more upside to go. We clearly broke above the 50% fib this afternoon. And then we dropped down very heavily and we closed below the 38.2. So this is starting to look very ambiguous now for the overall market. We had a big move to the upside and then a reversal completely down. So it looks like the market is in a sort of indecision mode, waiting for Powell's speech. It's a bit risky to hold something overnight. So anything that we're holding overnight should be considered as a lotto. But you know, this inverted head and shoulders on, you know, this the daily time frame is still playing out perfectly, and I think, you know, there is still more room to the upside. So after Fed speech and after CPI data, as long as we can hold 383, in my opinion, or even 380, we should be able to continue going up in the short term. In the short term, I mean the next month or two, like maybe max, right? But in general, like I said, my overall bias for the year is we should be falling much, much lower. We should be making new lows. We should be breaking below 350, and we should be hitting a recession into at least the end of the year or early 2024. So I'm very, very interested and excited to see how that plays out. We took a look at basically the main movers of the market. There's not really much else to take a look at. And for now, I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. And I will see you guys tomorrow. Thank you.